Good evening, everybody. Matrix here. It's March 30th and 11:05 p.m. right now. I just got home from work, but as I was at work today, I was really thinking about this LYFT IPO that I traded on Friday, and I think that I really wanted to make this recap video. Just because if I don't record it for myself, I think I'm gonna forget about it in the future. Personally, LYFT on the first day of IPO was a very clean trading day, in my opinion. Now, before we start this recap, I just want to put the disclaimer out there that this recap video is solely of my personal opinion only. So, I also want to note that at Trick Trades chat room, we um, we tell all our newer and beginning traders to stay away from the first day of IPO trading, namely because there are so many disadvantages to it. So today I want to talk about these disadvantages, and then after I also want to talk about the advantages and why I saw that there was an edge to trading this LYFT IPO on Friday, and show you my trades as well. So let's go over to the disadvantages right now. Personally, the reason why we uh, tell the newer and beginning traders at Trick Trades to not trade the first day of IPO is because, first of all, newer traders really lack experience in trading and screen time, as well as they're developing their emotional control in the sense when they're trading. So with an IPO coming out, a highly anticipated IPO coming out, the action on the first day is always very, very volatile. So I personally have succumbed to these emotions in the beginning days of my trading. And I believe, if I remember correctly, I watched the Snapchat IPO, I watched Switch IPO, and I also watched a couple other IPOs. I believe there was one ADT, I think it was the security company or something. I watched that IPO, and I traded a couple of them, and I personally lost and got whacked quite a bit back then in my time when I was started out trading and learning. So definitely not a trade in the playbooks for newer beginning traders. However, for me, after coming into the third year of my trading, my learning experience now, I have grown a lot as a trader, and I've learned to really sit back and watch my own emotions and the technical analysis side of trading, and really just trade the chart and come into a trade with a very controlled mindset. Okay, so for newer and beginning traders, definitely not recommended to trade the first day of any IPOs. Okay, definitely look for a lot more screen time and experience first before you decide to try to trade an IPO. Now, with that said, that's disadvantage number one. Disadvantage number two, another reason why we tell people at Trick Trades, the newer beginning traders, to not trade IPOs, is that IPOs on the first day, they don't have any kind of history, right? So it's a fresh stock coming out into the market with no history at all. And as technical analysis traders and Trick Trades, we trade off support and resistance levels. Okay. Now, without support and resistance level, it makes this IPO stock even tougher to trade or to make a thesis on. Okay. So with that said, that is also a reason why we don't encourage newer and beginning traders at Trick Trades to trade the first day of IPO. Now, with that said, I did find an edge in trading LYFTs this on Friday, and I want to talk about that as well. I actually weighted out and balanced all the advantages and disadvantages of LYFT, of the IPO itself, and here's one thing I do understand is on the first day of IPO, okay, especially on a company that is so highly anticipated, I found that there's an edge in it in trading it because a lot of institutions will be in this. And even though because there is no history in the chart, all they can do is trade off pure technical analysis. Most importantly, trend lines and levels that gets developed within the day, right? As well as having the edge of reading the tape, which is very, very important. Another reason why we don't encourage trick trades newer beginning members to trade the IPO is perhaps we don't know what their level of tape reading is yet, right? Personally, I've been polishing up day to day on my own tape reading skills and developing myself as a trader. So I really wanted to put this to the test. So with LYFT, I did find an edge. Now, there are a few things that or ingredients that came into the thesis of the LYFT IPO. Okay, so let's go over them. First of all, LYFT is a major company that is it's very well known, right? So the whole world was already anticipating this IPO months in advance. Now, up to Friday, before Friday, people were already pumping it up on the news, anticipating the IPO and saying how their valuation is going to go skyrocket higher and higher. Eventually, they settled on a price of $72. Okay, and when this IPO opened up at 87 and change, they super overshot and overvalued it, right? So that's number one part of the thesis. Okay, part two of the thesis, number two, is I also want to talk about that on the news. Before the IPO happened, a lot of people, I was looking on news, CNBC, Twitter, Market Realist, basically any kind of news feed I can find, and I was reading on LYFT, right? A lot of people were saying that LYFTs, they are not making any money still. So with a valuation of such a high opening price, it's basically, to me, the sense of overvalued is already there. Okay, so that was a key ingredient in my factor of wanting to short this IPO. Now, going into this, I also thought about how Lyft being such a well-known company and the first of its kind in ride-hailing companies, and how much people have been anticipating this IPO, I never let the idea of that if the IPO happened, the stock could and definitely could have shot up. Okay, so I kept that idea in mind as well. I didn't want to short it right away, or nor do I wanted to buy it right away. The thesis was to sit, wait, and watch for the trend to form. Okay. Now, because I did say that institutional traders, they can only trade on technical analysis on day one because there is no history or anything like that, right? So I really want to sit back, watch, and just wait for some sort of trend to happen. And this is exactly what happened, right? Usually when I trade on the 1 minute chart and the 5 minute chart. Okay, I find that lately I've been using the 5 minute chart a little bit more predominantly because I am looking for trades and theses that I am able to swing and hold all day, just for the day though. Okay, so I find that a longer time frame works for me. As far as the 1 minute time frame goes, I use it to gauge and make entries and exits, to fine tune my entries and exits. Okay, so let's get right into the recap. So, zoom in a little bit right here. LYFT opens up, huge IPO, right? Pop right out of gates, and then it started dumping and selling. And I was watching this all day, and I was watching it on the 5 minutes, right? Here are my executions right here. Actually, let me zoom out. You see that I didn't actually made my first execution until 12:37 p.m. Okay, so 12:37 p.m., which is right here. I've marked out my entries and exits already. I made 2 trades on it. Basically, I was just watching this, and 12:37 was right around this area. Okay, right around this area. So I literally watched it for almost an hour. When did it start? Yeah, almost an hour. About 50 minutes in, I was watching this, and it was following a very predominant downtrend. Okay, on the 5-minute chart. So I'm thinking, okay, uh, it opens, spikes up, fail, spikes up, fail. Now I start to draw a trend line, and then spikes up again and fail. Now my trend lines start to connect. I had 3 points, right? I see the stock making lower lows and lower highs. Okay, so I was now all set and ready and looking for an entry. And from here, I was starting to watch the tape. Okay, so what the tape told me is that at every 30-cent level from around this time of, let me see, around noon. Okay, every time around noon, as the stock would pop up, I see a heavy seller coming in right at the 30-cent mark, 30-cent to 50-cent mark. Every time it comes down, and then I would see a bid trying to hold it up, but they would pop up a little bit and then come right back down to the 30-cent mark and just held the offer there for a long time. The offer would hold like 30 seconds plus and then pop just a few cents above and then come right back down again. So at every 30-cent mark, from around this area, this noontime area, I saw held offers. Okay, that's when I decided that, okay, these are good risk areas. Okay, so my thesis started off as first I see a downtrend line. Second, I'm looking for levels where I can get in, and then I saw 30 cents held, and then I started developing the thesis of, okay, maybe these guys wants to play on the 30-cent levels. So as it was come down, it held again around this level. Let's see here. See the low of this candle, 85.30, right? And the high of this, the 30-cent level. It basically held all these right here. You see all these candles, the 30 cents, right here as well. Where is this? Let's see. The high of this candle, the 24-cent to 30-cent area. See, it held here as well. So when this finally snapped, the 30-cent level started to play, okay, and from here it started to play again, and then even from here, right here at 84.30, it started holding as well. As I was watching it, see the high of this candle around the 30-cent area, okay, and then this candle around the 30-cent area, okay. If you have Think or Swim on demand, I highly implore you to rewatch the tape and rewatch this IPO, as you will see and learn a lot from reading the tape. It showed a great example of what a held offer looked like. Okay, a held offer is basically a seller holding that price, right? And then as it came down around this level again, it held this level too, right? The 30-cent area. I mean, look at this. The closing price, the opening price, right? So within these 2 minutes here, this one I saw it held as well. So every time it tried to pop, the offer just held right here on this candle, and on this candle. Okay, so finally, I decided to get in, risking about 30 cents, 30 to 50. Okay, so risking about 83.30 to 83.50. I entered right here. Right here, I entered 82.21 at 12.37, and I got in 200 shares, and I was risking a little bit above this 30-cent level right here. Okay, so let's mark that off real quick. This was about the 30-cent level, a little bit above. I was trying to get an entry as close as the 30-cent level as possible, right there. So I entered 200 shares. My initial risk was only 10 cents, but then it popped. Next candle popped really high on me. And then I waited. And then I was thinking, okay, I was counting back the candles and I was looking at this green candle here. I was looking at these green candles. And I'm looking at their range. It's about $1 range on these green candles. And I thought, okay, risking 10 cents is kind of not realistic. So I'll give it up to $1 because these green candles pop $1. So uh, I changed my stop loss to $1 to 83.30. That was my change on the stop loss there. And then knowing that after my decision to increase my stop loss to 83.30, I downsized just to decrease my risk a little. So as it came back down, as you can see, I took 100 shares off, okay, leaving only 100 shares on, right at the same price when it gave me a chance right here. And when this candle kind of held, I took some off as well. So basically, this is the candle that gave me uh, the the reason to take off just a little bit, just to downsize, knowing that my risk was really up here. Okay, and then within the 10-second, this thing started flushing, and with the big flush at the snap of 82, I paid myself half right here, right here on this candle, and then I held this half, and I saw this volume, this massive volume coming through, and this candle came down all the way to where? 81.30. Okay. Um, I had kind of like a red flag here, seeing all this volume coming in. So I waited, and I wanted to see this stock either come back up or keep falling. So I waited and I held, and then eventually it snapped this area of 81, and I paid myself another half here. So let's take a look here. Yeah. So I paid myself right at the 81 mark here. So paid myself at the snap of 82, paid myself at 81, and then I left a few lotto shares. Okay, so with this last 25 shares, I was just basically looking for a reason to cover, right? So a reason to cover would be if the stock broke this downtrend line, I would cover it. Now, as you can see on the 5-minute chart, it broke this downtrend line. So I covered right around here. Let's see, at 12:53. So 12:54, 12:53.57. So right on the 5-minute chart, right around this candle right here. Okay. And basically that was it. When it snapped through my downtrend, that was my reason to cover. And I saw higher lows. I saw it bottom out at the $80 mark, right? Key psychological hold number. So that was my cue to get out. So I got out of it. Next up, going into the next trade, zoom out a little. I saw the bottom of $80 key psychological hold number, and when it came down and it tested 80 again, right here, I was watching this thing bounce off 80, bounce off 80, and I'm thinking, okay, double bottom, and then bounce off 80 again. I got in long, okay, thinking that I still had the thesis in mind of this is a very highly anticipated IPO. Where will people start to buy? Okay, so $80 key psychological hold number, very nice area. Double bottom also kind of reinforced the idea. Okay, and as soon as I saw this volume happen on this candle right here, I got in when it literally notched 80 and then started coming back up, and I got in right here at $80.12. Okay, and this was a scalp play because I know there was a lot of prior resistance up here, and my idea was just to scalp it out for $1, knowing that these green candles can go up $1, and that's basically what I had in mind. So as it came up, I took a little bit off here at the $half mark, and then as it came up some more, from here I didn't pay myself, but on this next candle, as it started coming back down to begin with. I paid myself, I took it all off, and then pop, drop, and came right back down. From there, I just left it alone. Those were my 2 trades on LYFT, okay? And I started drawing this uptrend line, okay? Basically, I was watching it all day. So we had we had a break of the downtrend and then a slowly grinding up of the uptrend. I never thought about buying it again after that because I saw this massive seller's candle, right? This is basically where I got out on the 5-minute chart. So I was thinking, okay, I don't want to buy this anymore. And then as I was watching this, I saw some key levels happening here. I saw the level of $80.50 getting bought up, bought up, bought up, bought up. Okay, every time it came down, it would get bought up. It's basically a held bid now. Okay, from around 1:40 to 2 o'clock or 2:10, it was a held bid on the tape, and I saw it kept getting bought up, but it never got over the 81. So I'm thinking, okay, there's a buyer in here accumulating shares and they're buying, and then eventually it broke out, and of course it failed, and that's when I started to draw this downtrend line. As you can see, this downtrend line, and I didn't drew till the end of the day, and I drew this out. As you can see, overall on the long-term trend, this thing is going down. When this uptrend line snapped, I really thought hard about taking it short, right? But then I was looking at the $80 mark and how strong it held. I'm thinking, okay, the risk and reward is not there, so I didn't take it. And because it's 3:30 already, getting so close to the end of the day, I didn't take it. And basically, apparently it was a mistake because it just snapped from there, right? It did bounce off this 80, tested, and from this snap, it was too late. It never gave me a chance to get back in short. But as you can see, at the end of the day, it followed this nice trend line long term throughout the day. We have a nice pivot point right here where this uptrend line and this downtrend line meets. Okay, so this is going to be a key area I'm going to be watching for, the 80-75s area, all the way up to 81. Okay, so coming Monday, I'll be watching for this level as a resistance area. So mark that off right there, resistance zone. And then we snapped the whole dollar of 80 as well. So I'll be watching for a pop back up to 80 and looking for a fail. So we have 2 sets of resistance right now coming in. I guess we can say this is a nice resistance area as well, the 82. Perhaps give it to 82.30, right? So the VWAP, okay? So 82.30 to 82.50 is actually what I'm looking at. Right about here, okay? So this is another resistance zone I'll be watching on Monday. Overall, I do think LYFT is overvalued after watching it on the day, and with these many sellers coming in, I do think there is going to be a pop back up. I understand there are some people located, some shorts as well. For me, there were no shares, there were no borrowing costs, so I could have shorted it at will at any time I wanted. So let's take a look at this. The $79 mark, nice area here as well. So give it up to 79 to 79.30. Look at that. Perfect. 79.30. Okay. So I'm going to follow the thesis that the sellers are still there and they're still trying to bring this stock back down. How low would it go? We don't know, right? All we know is that they initially opened at 72 bucks, right? And they overshot it. So I guess 72 would definitely be a prime target, right? With IPOs, I'm going to follow the whole numbers of like every 250. So $75, 77 and a half, 72 and a half, 70, right? So I think it'll get down to 72 and a half. We'll see. That's my plan on it. on Monday. But I hope you guys enjoy this recap and understand why I thought there was definitely an edge in trading the LYFT IPO. I think personally, if you don't have any kind of tape reading skills, you can't really trade this stock. It's kind of hard for you to trade this without tape reading skills, because that is a big part of what I call my edge in trading LYFT on Friday. So being able to identify the held offers and held bids kept me nice and quiet and didn't trade. Like for example, I saw a held offer here at 81, but I also saw a held bid here at 80.50. So knowing that there was a battle going on, I didn't trade it, and I didn't get chopped out there. Excuse me. As you can tell, I'm still really, really sick. I have a cold and a minor fever, but I really feel like I needed to get this recap out to you guys, and perhaps this will be in your one of your future plays. This will definitely be in one of my playbooks for future most highly anticipated IPO day ones, right? So I'm gonna catalog this into my playbook. With that said, I hope you guys enjoy this recap. Make sure you hit the like button and subscribe. And I'll be doing another recap tomorrow night on my other trades that I took. And I'll see you guys all bright and early on Monday. Ciao.